Hello, traders. FXPIPCOLLECTOR here. Today is Wednesday, January 31st, and welcome to today's live stream. We are definitely here for the FOMC rate news coming out in a few minutes, so let's check out the news calendar. Let me go to here, take off that. So we are definitely about 15 minutes, 14 minutes away from the news, so we definitely want to make sure we're checking out these dollar pairs. They're expecting to keep the rate the same, but most likely, I don't think they're going to change it yet. I really kind of doubt that they're actually going to change the interest rate this time. Maybe next time they'll change it, but I kind of doubt that this time they will. But anyways, if anybody is interested, before we get started, just a real quick shout out. If anybody's interested, I do daily live streams at 7:30 a.m. UK time every single day. And then I also do a New York live stream every single day for my Patreon members. If anybody is interested in that, the link for that is going to be in the chats and in the description. Definitely a pretty good deal for your money because we do 9 live streams a week, and I also share my swing trades at the time that I take them. So, if like I said, if anybody's interested in that, the link is in the chats and in the description. So, anyways, let's get to the charts. Like I said, we only got about 14 minutes or less now, so we definitely want to get to these charts. I actually prefer to use the DXY, not the DXY, but the US dollar index for my charts for the US dollar. Basically, because the DXY is pretty much a mirror image of the euro dollar, but in reverse. So I definitely prefer to use this dollar index. Now, I'm definitely still looking at this move up as possibly being a correction to this move down. I think this is possibly already ended a correction, either wave 2 or wave B. That would mean that this is most likely going to go down and either make a wave C, which is probably the most likely scenario, that this would go down and make a wave C, and a wave C would probably go down to here, or maybe it really is a wave 3, and if it is a wave 3, then it would go down to the 161% Fibonacci extension, and perhaps a lot further down than that. So we'll have to see. Now, whether or not that correction is over, I kind of doubt that the correction is actually over at this point. We are at a Fibonacci level. We are at the 50% Fibonacci level, and we definitely do have a very clear 1, 2, 3, 4, 5 waves down. I would call this a wave 1, and I do think that we are in a wave 2 right now. Now, whether or not this correction is over, like I said, I kind of doubt that the correction is actually over. Now, we have been extremely sideways on the US dollar for almost 2 weeks now, just very sideways action. So I think the dollar has been kind of waiting in anticipation of this news. So let's take it right down to the 1 hour time frame. Now, my initial thoughts pretty much all week long was that the dollar was going to go down. That was definitely my initial thoughts pretty much all week long, dollar down, and just continue the downtrend, or possibly go into an ABC correction on like the 4 hour. Like this would be a wave A, and this would be a wave B, and then it would eventually go back up for a wave C, and this would all be like an ABC of two. So like I said, that pretty much all week long that has been what I've been calling on this. But I kind of feel like that with now seeing what price action has done over the last 24 hours or so, I kind of feel like that may not be the case. I kind of think this right here is possibly a top, and this right here is a five-way pattern down. And then this is all one big overlapping correction, probably some sort of a complex correction. And this is like a wave A, this is a wave B. And I think we're most likely already in that wave C. Now, I think that initially the news probably is going to cause this to go down, and it probably is going to take out these lows. But I think we may have a second reaction during the speech, which the speech comes out at about 30 minutes after the dollar news, and then you have to wait for the Q&A version of the speech before you even know for sure whether the dollar is going to go up or down or what it's going to do. As you can see, the federal funds rate news comes out at 7 p.m. UK time, and then the press conference starts at 7:30 UK time, but it lasts about 30 minutes, sometimes 40, 45 minutes. And usually the Q&A doesn't happen until, at least 30 minutes into the meeting. So the Q&A is actually when the market usually decides on a direction and actually starts moving. So usually you have to wait about an hour, maybe even an hour and 15 minutes until after the news is complete before you really, know whether it's going to go up or down or what it's going to do. So, like I said, I do think the first reaction on the news is going to be down. I think it is probably going to take out these lows. I expect that this is going to be a wave C, and I expect that it's going to do a reversal. Probably towards the round when the speeds is coming out, I bet it's going to come back to pretty much the starting line, and then it's probably going to bounce around, while the speeds is happening, and then eventually, I think it's actually going to go up again. And this may already have made an ABC crescent right here, like I said. So now that we kind of have that figured out, we at least think that we know what's going to happen. Now we need to take that information when we need to apply it to all the dollar pairs. Now, if I expect that the dollar is going to go down and then up, then I would expect that this would probably go up initially and then probably do a spike reversal type thing. Now we're gonna have to see. I mean, I definitely am on the higher time frames, especially like the weekly time frame. I am definitely very, very bullish on the euro dollar. I still think this move down is a correction to the uptrend, but I kind of feel like this correction is probably not over yet. Now you go down to the shorter time frames, it's at the 78%. So if it does start to go up, if it does start to break structure, then obviously that for me is going to be the end of an ABC correction. And at that point, I would definitely be a buyer probably for the next several weeks to next several months for the continuation of this uptrend. But I kind of feel like this is probably not over because most of the time, if this really is a wave one and this really is a wave two, most of the time you will have a wave two take out the lower wave four. And it happens the majority of the time for sure. So that kind of makes me think that this is going to go up. Probably everybody's going to stop buying. Everybody's going to get trapped in buys. And then it's probably going to go down. And probably over the next couple of weeks, it's going to eventually go down, take out these lows before it really does end up continuing the uptrend. So, like I said, spike reversal, I think is probably the very likely scenario when you're talking about that. Going down up to about the 4 hour time frame on this, definitely major, major sideways. We're definitely in a very, very tight little channel right there. So I kind of feel like same type of thing. I mean, it might even spike up and take out these highs. Maybe touch this 50% Fibonacci extension, which is like a daily, weekly extension, Fibonacci extension level. Maybe even go all the way up there, and then I think it may even start drifting down. Like I said during the speech, I think there's a pretty good chance that it probably is going to start to drift down during the speech. Seems pretty likely to me. Now, if you go to the Aussie dollar, kind of the same thing. I mean, I have been calling this possibly an ABC correction because it did go into the level of wave four, just like wave two should go into the level of wave four. But I also kind of feel like this is maybe forming some sort of an ABC right here. And the same type of thing is going to actually happen on this. Like this is going to be like one big ABC correction right here. And this is possibly going to go up, take out all these highs, maybe grab some liquidity, and then it's probably going to go down maybe into one of these lower fib extensor levels before we actually do get the continuation of the uptrend. So yeah, let's go down and check out some of these other pairs. Like I said, we got about 6 minutes or so. I don't really analyze the Kiwi dollar regularly, so I don't really have labels on this like I do the Aussie dollar. I do have my own charts that I share with my Patreon members where I do analyze I do prefer white charts. I do analyze all these pairs on this list right here for my Patreon members. And like I said, we do these daily live streams. Every single day we do a live stream during the London session every single weekday, starting at 7:30 a.m. about 90 minutes. And then we do a 2 hour live stream during the New York session. So that way, whether you live in, like the UK or Europe, or whether you live in the US, you can still usually attend at least one of the two meetings, most of the time at least. So, anyways, like I said, these are the charts that I share with my members, which have way more detail. And every single thing on this list, from Bitcoin to natural gas to pretty much every single thing, oil, gold, everything on this list is analyzed twice a day for my Patreon members. So, like I said, if anybody's interested in that, definitely check out the link in the chats and in the description. But same thing as the Aussie dollar. I mean, it kind of looks like this is an ABC correction to me. But like if this goes up, it makes a nice impulsive move and holds it throughout the press conference. And yeah, I would definitely be willing to change my mind. And I don't think it's going to be too late if I do, and if it does end up continuing the uptrend, because I actually think that this, which I don't even have labeled on this chart, I actually think that this is a wave Y on the monthly time frame, which means this is going to be an ABC of wave Y, which I still expect to go up to one of these higher Fibonacci extension levels. Like I said, the charts that I share with my Patreon members have way more detail than the than these other ones because I pretty much just do the ones that I analyze on YouTube, which is the euro, the pound, the Aussie, the CAD, the yen, gold, and the euro yen and pound yen. So anyways, US dollar CAD. Let's go back to the 4 hour time frame. I kind of feel like this is making some sort of a maybe a WXY pattern because it looks like three waves up to me and it looks like three waves down. I kind of think this is maybe either going to start a five-way pattern up or probably more likely it's going to be a three-way pattern up. And this is also going to be a WXY, most likely a wave one down here, most likely a wave two up here, and then back down for a wave three is kind of what I would expect to see. US dollar Swiss, kind of the same thing. I mean, this one at least looks more like a trend, so you could at least call this one a proper wave A. I think this would be a wave B, and I think, yeah, maybe initially it probably will go down, but I think the trend is up, and I think it will continue up, at least for the next couple of weeks, I would expect. And I still expect this to be like a one and a two also, which means the next move down probably would end up being a wave three on this one also. And I think the US dollar Swiss is actually a wave three of three on the higher time frames. Which, like I said, I don't really have it on these charts, but if you go to here, you can see what I'm looking at. I have my projections for the higher time frames on here that I share with my Patreon members, and I think we're already in a 1, 2, 3, 4, 5 to the downside. So yeah, let's get back to these. Like we said, we only got about 3 minutes or so. So the U.S. dollar yen, same type of story. I was actually kind of thinking the U.S. dollar yen already ended a correction, but it's pretty obvious now that it didn't. Um, but I still am very, very bullish on the US dollar yen. If you've seen any of my most recent videos, I do believe that the US dollar yen most likely will go up and take out these highs. I do believe that the yen pairs may be getting close on like the weekly, but when you mean close on the weekly, it could be, anywhere from 3 weeks to maybe 3 months, so I do think we are getting closer to making a big move down on the yen pairs, but I don't really think we're there yet. Same type of thing, though. I mean, yeah, initially it might even go down, maybe even all the way to the 61.8, but I think the trend is up. I think the trend is going to continue up. And it might not even be a wave five. It could possibly be just a subdivision of a much, much larger uptrend. So, anyways, and gold. Everybody loves gold. So, to me, I definitely do think that gold is in a wave three on the. If you've seen any of my most recent videos, I do think that this is a one, a two, and I do believe we're in a wave three on gold. And honestly, if gold does just keep on trending up, I would actually think that would be a completely normal looking pattern because I do believe we're in a wave three, and a wave threes are supposed to be the biggest, strongest waves of a trend. So if that does just keep on going up, it really wouldn't surprise me at all, not even a little bit. But as you go down to like the daily time frame, I kind of feel like gold is in a WXY pattern too, and this is probably like a one of three, a two of three. I think this is three waves for the W, three waves for the X. I think this is like a three-way pattern for the wave Y of wave two, and I feel like that is going to most likely continue the uptrend also. So, long story short, on gold, I do kind of expect that it's going to go down. Well, we're about to get the news. All right, we're about to find out. I kind of think gold is going to go down. I kind of think the euro is probably going to go up. I think it's going to be a spike reversal. I'm sorry, but we'll see in a second. So far, oh yeah, so far not a whole lot of a reaction. Hmm. Excuse me if I do get a little quiet on the news. I definitely trade my own analysis. I have a second screen above this screen, and I actually have a third screen to the left, to the right also. But I definitely change. I definitely trade my own analysis for sure. You gotta. You definitely gotta. That's for sure. Hmm. Not as big of a reaction so far, is it? Maybe we won't get that spike reversal. Normally, this news does cause a spike reversal. I kind of feel like gold might just continue the downtrend. Maybe this is not going to be one of those spike reversal days. Porcupine pattern, I like to call it. The porcupine pattern is pretty dang common for these news events. Hmm. Just trying to decide whether it's worth getting in something. I kind of feel like since it's not moving like a lot, we should probably wait for the press conference, huh? Let's actually look and see what happened. I kind of doubt they changed it, huh? Oh yeah, they definitely kept it the same. So now probably what's going to happen is probably during the Powell speech, especially during Q&A version of the speech. Powell is probably going to say something about how he will most likely next year, not this year, but maybe not next year. I'm sorry, but most likely like this spring or maybe this fall, he probably will start lowering interest rates if the economy allows it. So I think that just the fact that he's going to kind of hint to the fact that sometime this year, maybe in Q3 or something, they probably will start lowering rates a little bit if the economy allows it. So I think that alone is probably going to be what actually ends up causing, the speech is actually what's going to probably cause this to go down. So, well, definitely not the big reaction I was expecting so far. Mott's is the next interest rate, right? It's every 6 weeks, so I have to believe it's every 6 weeks, or maybe it's every 8 weeks. I can't recall offhand, but hmm, the fact that it's going down right now kind of makes you wonder if this turns into a wave five and then the speech causes it to go up and break structure. That's going to be a completely different thing, and at that point, I would be happy to become bullish. Very, very happy to become bullish. We'll have to keep a close eye on this. See, I mean, the spike reversal pattern is such a common pattern during this news that you almost think that this first initial move may not even be the move of the day. Maybe this is like a 3, 4, 5 right here, and it's gonna just retest this 78%, and then it's just gonna keep trending up. Like I was saying to my members earlier that this is kind of a little bit of a tough one because the DXY and the US dollar have been just so sideways for over 2 weeks now. You can look today's Wednesday right here. You can see right here today's Wednesday, obviously. But 2 Wednesdays ago is pretty much when this thing started going into this very, very, very tight channel, and it's just been bouncing around this tight little channel for quite a while, which definitely does make it a little harder to find a good direction, obviously, unless you're just trading the highs and the lows of the channel. Which some people are very, very good at trading the highs and the lows. I'm a trend trader, so I would definitely much prefer to get in a trend. And when the market's not trending, it definitely can make it a little tougher, especially for somebody like me who prefers to swing trade a little bit more than anything. I don't really. I prefer to get in a trade and hold it for 2, 3 days, maybe anywhere from 2 to 3 days to 2 to 3 weeks, and that's definitely the trading I prefer to do. But when the U.S. dollar is doing this for 2 weeks in a row, yeah, you kind of got to move away from the dollar and find something else that's trending. I've been trading oil. I actually been doing pretty good on oil also. Oil's been very, very good to us lately. And some of the other pairs beyond the yen and the dollar have been very good to us too. So like the Aussie CAD, the Aussie Kiwi, and some of those pairs. Even the Euro Pound, I really like sometimes. Sometimes you really do have to step outside the dollar and step outside the yen and trade some other things. Hmm, man. Definitely not the big reaction. Let me get rid of this line. I had that line here for like 2 weeks, so that way we could kind of judge where the news was coming out. But way when the market was like way back here, I put this line in there so I could try to draw what I thought was going to happen between now. And this was the picture I've been drawing for like the last week and a half for my members. Cause this is exactly what I thought it was going to do prior to the news, and then I thought the news was going to cause it to go up. It still kind of looks like it could. I think it's going to go back to the starting line. I think it's going to go all the way back to here. It's going to just pull back. It might even drift down a little bit because I feel like it needs to go grab this liquidity right here. And then maybe it'll just do a reversal during the speech, during the power speech that we got coming out in a little while. So we do have about 25 minutes before the speech even starts. Like I said, starts at 7:30. So in the meantime, I would be happy to take requests from anybody that would like me to look at something because I do understand that I pretty much only look at the euro, the pound, the Aussie, the CAD, the yen, gold, and a couple of yen pairs in my videos. So yeah, we definitely look at gold a lot. I do expect gold is going to go down overall. I mean, I kind of feel like it might go up a little bit, but I think down is going to be the direction. I mean, maybe it will go up and make a double top right here and then end up going down, but Yeah, I can go look at the Nasdaq for Diago or whatever because we're definitely gonna focus on these dollar pairs pretty intensely because that's the news that we got coming out. Oh, Bitcoin, there you go. We'll go look at Nasdaq. We'll look at Bitcoin. Maybe look at some yen pairs. Yeah, definitely. Long story short, I mean, I kind of do suspect that this could go up a little bit, but it might. I would definitely be looking for shorts. I am definitely looking for shorts, 100%. So kind of the same thing on the pound dollar. I see somebody put the pound dollar in there. I was actually thinking that the news was going to cause this to go up, grab this liquidity, and then go down. But we'll have to see what happens at the speeds. I mean, this is so far, this is definitely three waves up. So it may just pull back to the starting line and then during the speeds continue to the downtrend. I think that could definitely be what's going to happen. Let's go look at Nasdaq. We'll look at Bitcoin. We'll look at oil. Like I said, we got about 25 minutes until the news comes out, so I think it'd be a good, kind of a thank you for subscribing and things like that to go look at some pairs for people while we're waiting for that second round of news to come out. Uh, I do not really look at Nasdaq regularly. I do look at the SPX 500 regularly, and I do have that, kind of labeled out. But the Nasdaq, I don't really have any labels on it. But it's the exact same thing that I think is going on with the S&P 500, which is I think obviously we're in an uptrend. I mean, there's no doubt about that. I think this is a one, a two. I do believe we are getting a little closer to making a big move down. So what I would actually do is I would have to put a Fibonacci extension on here to try to project where this thing should turn. I would probably use it from here to here, and that would be the fib level that I would probably be. Whoops, wrong one. This one? No, this one? There we go. So there we go. I am a big fan of Fibonacci. Fibonacci, Elliott wave, and then just basic price action. I mean, you don't really need. I do once in a while use an oscillator, like you said, like you can see on here. I do have an oscillator on my chart, but most of the time I don't even have it there. I usually just make it disappear because I really am not a big fan of indicators. Yeah, yeah, I think that everything's going to go back to the starting line. I totally think so. So I do think that the Nasdaq is in a one, two, three, four, and we're probably all in a wave five right now. But most likely, this wave five is not over. I think the level that you should be watching for is probably right here, the 18421 area. I think is probably going to be a hot spot. And I do think, based on the SPX, I do think that we are going to get a huge push down at some point. And I think that these possibly even could take out these lows, but we'll see how that goes. I mean, I definitely wouldn't be betting against that right now. I would definitely be very bullish. And going down to the shorter time frames, boy, that looks like a correction, doesn't it? A, B, C. I would put a Fibonacci on there. Fibonacci retracement. Like I said, Fibonacci, Elliott wave, basic price action. Pretty much all you need. And multiple time frame analysis and correlated pairs. With all those things, you can read the market pretty well, at least on the higher time frames you can, very easily. So what I would be looking for is I'd be looking for a bullish engulfing candle at a Fibonacci level to go long, which honestly, it could happen during the power speeds. It could respect this 38%, make a bullish engulfing candle. If it does do that, that probably is going to be an ABC correction, and it's probably going to be a pretty decent entry to go long because, like I said, I would actually be projecting this out to at least the 1842 area probably on that. So that's pretty much kind of what I think about that. I know this is probably a little bit of a controversial analysis on Bitcoin, but I do believe that Bitcoin is a one, two, three, four, five. I mean, it's extremely clear downtrend. I'm calling this a wave A. And this is extremely clear also. One, two, three, four, five. A, one, two, three. So five waves, A, three waves down, B, one, two, three, four, five waves, C. Right to the 61% Fibonacci retracement and the 50% Fibonacci extension. Nice big impulsive move down, break a structure. I personally think Bitcoin is going to go down. I have been saying down to take out these lows. I mean, that's still my analysis. But with all the money that's going to be pouring into Bitcoin over the next, little bit, I kind of wonder if it's really going to go down that far. I mean, maybe it might be more likely that it just makes like a bigger ABC correction and maybe goes down. These tops become bottoms, and then it takes off to the upside. That actually may be a more likely scenario, a more likely outcome. But I would either say this area right here would be my one of my outlooks, or possibly these lows down here around $12,000, $10,000 would be another one of my outlooks on Bitcoin. And then you go down to the shorter time frames. I mean, look at this. This is actually very, very, very nice. Nice little downtrend. Wave A. I think this is a wave B. I expect that it's going to go down for a wave C at least. And honestly, it might even be a 1 and a 2 of wave A. Like I was saying, it might even stretch out and turn into this a 1, 2, 3, 4, and 5. And that would just be a wave A of a bigger move to the downside. But either way, I'm definitely bearish on this. I don't think it's gonna. I do think that Bitcoin someday might get to like 100K plus, like everybody says, but I think before it does that, it's gonna go way, way down and shake everybody out. Like I said, it's either probably gonna do this and then go up, or it's gonna do what I kind of expected it might do, is make a big downtrend, take out these lows, and then go up from there. Kind of seems to me like that's probably the most likely scenario. So, anyways, we did Bitcoin. I did the S&P 500. I thought there was something else on there. Oil. Yeah, we can definitely look at oil real quick. I saw somebody request that. I got to go back to these charts right here because it's so much easier because I have labels on these charts, way better labels on these charts than I do on my other charts. And like I said, for my Patreon members, I do a live stream twice a day. I do 5 live streams: Monday, Tuesday, Wednesday, Thursday, Friday, 90 minutes, starting at 7:30 a.m. UK time. And it's analysis, but we also do live trading. I take live trades during these meetings all the time. And during the New York session, I do a 90-minute to 2 hour live stream also at 1 p.m. UK time, or 8 a.m. US time. And I do that every single weekday. On Mondays, I don't do a New York session. I only do 4 New York sessions a week. I do 5 London sessions a week. You also get access to my trading course, which is this kind of a starters thing. And then I also share all my setups, all my swing trade setups with the group. So, like I was saying, if anybody's interested, I mean, it's a very, very cheap deal, because I like to keep it very, very cheap, especially compared to most people that do the type of work I do, because I want it to be affordable for everybody. So definitely check that out. The link for that is in the chat and in the description. So on oil, I was definitely expecting it was going to go up one more time, but I was definitely expecting this to be an ABC correction. But I was kind of expecting that it would go up and take out the high wave four, which is kind of what I still expect. I kind of still think that this is going to go up one more time, probably to the 50% Fibonacci retracement, take out the high wave four, and then I feel like it's going to go down again. But boy, it's definitely pretty strong. Let's throw a fib on there. Actually, it's not really to the point yet where it's not an ABC, is it? Oops, I didn't put that in the right place. That should go up here, base channel. I only want to see that on the shorter time frames too, so. Yeah, pretty much. The second Powell shows his face, the market's gonna start ripping. You know that for sure. What was I doing? Yeah, I want to put this on like the 4 hour time frame. Pretty much the second Powell walks on the stage, the market's gonna start moving. I have uh I have it ready because I do like to at least have it in the background. I don't really like to watch it, but I do like to have it on so that way I can tell when the Q&A is actually coming. I like to watch CNBC or Bloomberg or something like that. Like I said, I definitely don't really want to listen to it, but I do want to know when the Q&A is coming, so that way we can kind of keep an eye on when the market is actually probably going to start ripping. So we put a base channel on there. Part of the purpose of a base channel is that if it doesn't break out of the channel like that, if it does break out of the channel, it's a wave 3. If it doesn't break out of the channel, then it's a wave C. And that can be a really big help for ABC Cretsons. Major, major, major help. So I feel like I would definitely be calling this an a potential ABC right here for sure. There we go. So yeah, I would potentially say that this is an ABC Cretson. Oops. I know most people, like I said, most people prefer black charts, but I'm a little bit colorblind, so I do prefer. I'm actually very colorblind, so I do prefer the black and white. I know most people don't like it, but that's why I make videos with black charts. But I prefer white way better, even though it's a little harder on the eyes. So I would definitely still be looking. I would be looking for a bullish engulfing move, but I kind of feel like it might. It's probably more likely to go down a little bit more. Maybe end up looking like that. So I'm definitely still bullish on oil unless it breaks out of this base channel with some force. And then if it comes back and retests the base channel like that and then makes another impulsive move down, that's where I'll go short like that. Or if it goes down and bounces off this, especially if it gives you a break of structure, that's where I'll go long for the continuation of the uptrend. So at this point, I would just be the strategy at this point is either be short from up here and be learning and earning whether this is a wave three or whether it's a wave C, or you'd have to wait for this to go long, or you'd have to wait for this to go short. This right here, a retest of the channel. So there we go. Let's move on from that. Let me get rid of this for now. So I don't really like keeping my. I like to keep my charts pretty naked. So let's see. What do we got going on? Let's go back to the dollar. Go back and look and see if anything's happening. Not really too much yet. I kind of expected this is going to end up all the way back at the starting line. I think it's going to end up back at the starting line before it actually makes a move up or down. So what do we got for time? We got about 12 minutes left. So if anybody would, we're going to definitely cover the dollar pairs very thoroughly again. And we've already covered them pretty thoroughly. But if anybody would like me to look at something outside the dollar pairs, um, I see the euro pound up there. Euro pound is actually kind of a tough one on the higher time frames to get a good count on. I mean, it's very obvious that we're either in an ABC or we're in a 1, 2, 3. I mean, this is very obviously, this move down is very obviously either an A or a 1. This right here is very obviously three waves up for either a wave B or a wave 2. So now the question is whether we're in a wave 3 or whether we're in a wave C. And I don't really like to speculate. I like to let the market tell me whether it's a wave C or whether it's a wave 3. So how will I know if the market's in a wave C or a wave 3? I will know because I know based on Elliott wave and Fibonacci and the relationship between Fibonacci and Elliott wave, I know that if this is a wave C, then it will probably bounce off either the 100% with a breaker structure, maybe the 123, maybe the 138. I also know that if it does, make a bounce with a double bottom with a breaker structure, I'll know that that's a wave C and I'll know that it's time to start going long. But I also know that if it bounces and then doesn't break structure, bounces, and then it works its way below the 138, that I know that I'm not looking at an ABC. I know I'm looking at a 1, 2, 3. So the strategy is definitely to continue to look for sorts while you learn and hopefully earn. Learn and earn is my favorite way to figure out whether something is a wave 3 or a wave C. Learning and earning is the best by far. So I want to learn and earn while I learn whether this is a wave C or whether it's a wave 3. So, you go down to the way shorter time frames. What am I doing? I'm looking for shorts on every single pullback that I can possibly get in. Every single little teeny pullback, I'm going short. And I will continue to go short until the higher time frames tell me otherwise. Yeah, let's go check out the yen pairs. Hmm. So, hey, Vaki, how's it going? Oh, this guy's from Iraq, just in case you didn't know. I'm gonna have to put him on timeout or something. But anyways, yeah. So anyways, let's see. Let's go look at a couple yen pairs real quick. Like I said, I like to take some requests while we're kind of waiting for Powell. See what Powell has to say. You just missed my oil analysis, Rocky, but you can definitely see it in the morning, I guess. Let's see. I still am looking at the yen pairs as a Kretsen. I'm starting to wonder if it's actually a wave four. I kind of feel like it. I kind of feel like it may not be a wave four at this point. I feel like it's probably just a subdivision of a much larger uptrend. I am still very bullish on this. I don't really think it's over. I guess we could be proven wrong because, like I've been saying on my videos forever, I mean, this could be a wave A, this could be a wave B, and it could definitely be in a wave C, and that would be 100% a normal looking thing if that's what it is. Same exact thing on the pound yen, except for the pound yen was actually quite a bit stronger to the upside. I mean, but this could definitely be a wave A, this could definitely be a wave B, it could go down for a wave C. But I personally am definitely bullish on both of these still because I actually think that on the monthly time frame, I actually think this needs to go up, take out these highs, and then it's going to go down, make a big wave four, and then back up for wave five. Same thing on the euro yen. I actually think the euro yen may possibly go up and then make a bigger correction, and then maybe make a big move to the downside. But I guess we'll have to just watch and see. I would definitely be keeping an eye on these fib levels, and I would also be going short on the sort of time frames until I saw something like this at a fib level. When I see something like that at a fib level, I would stop looking for shorts and I'd start looking for longs again for sure. Same exact thing on the pound yen. I would definitely be looking for shorts until I saw a break of structure to the upside on shorter time frames. Or if you're more of a swing trader, I would just be patiently waiting for a fib bounce. It could be any one of these fib levels. It doesn't. We don't really know exactly which one it's going to be. We may speculate, based on support and resistance in the past, which one may be the most likely. But we don't really know for sure which one's going to be the most likely. We're just going to have to watch and find out, I guess, definitely. But yeah, I would definitely be looking for longs on the end pairs, 100%. Kiwi CAD, I was thinking was going to, I think it's in a wave C. I think the Kiwi CAD needs to go down a little bit more. I think it needs to go down. Oops, I get rid of this. I think it needs to go down probably to and then if it bounces out to 50 again, especially if it makes a structure break, that would definitely turn me into a buyer big time. But until that happens, I would definitely be looking for shorts because we don't really know that it's going to turn at this level. I mean, it could possibly go beyond that level and turn it to 61.8, but I would definitely be looking for shorts until we get a reaction at one of these Fibonacci levels, which gives us like a break of structure and a good bullish engulfing move at a fib level when preferably a break of structure is what I'd like to see on that. The pound Swiss, I am still looking at the pound Swiss as a correction to the uptrend. I still think this is impulsive up, corrective down. It probably is more likely to make some sort of a three-way pattern, like this would be an A, B, C, and then back up again. And kind of like what I say about a lot of things, this is either an A or a one, this is either a B or a two. It's probably going to go up for either a three or a C. And if you know the relationship between Elliott wave and Fibonacci, then you know how to use Fibonacci to tell you whether you're in a wave C or whether you're in a wave three or what kind of wave you're actually in. So if you know the relationship between Fibonacci and Elliott wave, I mean, and you have a basic understanding of fractals and multiple time frames and how trends form trends within trends within trends, then you don't really need indicators really that much. Like I said, I do have an indicator down here, but most of the time I have it disappeared. Most of the time I don't even look at it. So I would be looking for a bounce. We do have a little bit of a 1, 2, 3, 4, 5 shape. I think the most likely thing is that probably we're going to go up and then probably down and then probably back up. That's definitely what I would kind of expect to see, something along those lines, definitely. So gold is dropping. Let's see. I got it on my second screen. Let me look and see. Gold's not dropping. Nothing's gonna happen until Powell shows his face. But he's getting close. We only got about 5 minutes until the speech starts. So let's get in a couple more requests. I got the pound Swiss. I did the Kiwi CAD. We're gonna look at all the dollar pairs, including gold, in a minute. Once Powell shows his face, we're going to look at all the dollar pairs again. Let's see, did I miss any requests? Yo, CAD. There we go. That's another good one that I'm waiting for. I got some things that I'm definitely waiting for. So the Yo CAD is definitely one of them. I mean, we are right at a fib level. I mean, to me, I think this is wave one right here. I think we're in a wave two. It doesn't have to turn it to 61%, but if it does, uh, so if it does, then most likely we're going to recognize that, and we'll definitely be able to go long in for the continuation of the uptrend. So the Euro CAD, you can tell I got a little blue flag on here because I'm watching it like a hawk. The Aussie CAD I'm watching closely too, and a few of these other things I'm definitely watching. The Aussie Kiwi is another one I'm watching like a hawk outside the dollar and the Kiwi pairs. So I would be watching to see if we get a reason to think this is the end of a correction. Well, how would we know if it's an end of a correction? Well, if it respects the fib level, makes a double bottom like that 3-4-5 shape, 1, 2, 3, 4, 5, impulsive up, break a structure. That's when I would become a buyer, and then that's where I would be looking for longs in the uptrend for sure. So definitely I'd be doing that. Yo, Aussie. Yeah, did the Yo Aussie end the correction? I almost think it did. I almost think this right here is the end of a correction, and this is possibly going to keep going up, especially because I think this is the end of an ABC right there. I think we may have the end of a correction. I think yeah, I would say this is like an A right here. This is 1, 2, 3, wave B, 1, 2, 3, 4, 5, wave C. It kind of turned right in the middle of two Fibonacci levels, but yeah, I would think that this is very likely to be already ending a correction. The pound CAD doesn't look bad either, definitely. Kinda for sure. Oh yeah, look at that. That's looking pretty good too. Pound CAD. Definitely. Look at how nice that ABC is. A, B, C. Trust the pattern. That's for sure. Find clarity, and then when you find the clarity, trust the clarity, and just go trade a shorter time frame and just trade the living crap out of it. Once you find clarity, go to a shorter time frame and just trade the living crap out of whatever direction your higher time frame tells you to trade in. It's really not that hard. Like I always say, it's us that makes it difficult. Usually, the part that makes it difficult is we're always trying to get a good risk to reward ratio or something like that, and we get in. Maybe you get in right here, and then it goes down and stops you out, and then you don't get in again, and then it takes off without you. So trading is such a psychological thing. I mean, it really is big time. So Powell should be showing his face any minute here. Let's see what's going on. Let me refresh just in case it's already started. 7:30, it starts. Let's see what Powell has to say. Let's go back to the dollar. So yeah, definitely we're gonna have to start doing these live streams more often again because I do like to take requests from people as a little bit of a thank you for liking and subscribing to my channel. So definitely stop in at these live streams, like and subscribe to my channel and watch my daily videos. I put out a lot of videos each day on the dollar pairs. So, what do we think? Let's go down to a slower time frame. When Powell shows his face, this thing's probably going to start moving. Oh yeah, here he comes. Watch what happens as soon as he steps out. It's going to be like, it's going to start getting volatile. I'm not long on the euro dollar now. I'm not in any dollar trades actually. Not yet. I'm sort on the cat Swiss still, and luckily I took my 50% profit at a 1-to-1. Otherwise, I'd be a little bit sad about that trade, but it's risk free now, so I don't really care what happens. That was a big push down, big reversal, and actually now it kind of looks like a wave C, and it could possibly keep going up, but we'll see. But yeah, I'm not actually in any dollar pairs at the moment. I don't really know if I want to go long on the yo. I almost want to go short on the yo, to tell you the truth. Hey, that guy right there, look at him. He's just waiting to grab the first picture. He can't wait. Yeah, I'm kind of waiting a little bit to see what happens. We're going to see some volatility here in a little bit, I think. Let's see. How do I turn on closed caption? I forget. I think it's already on. Oh, no, here it is. In settings. Closed caption. There we go. Turn that on. There we go. I don't actually want to listen to it, but I can read it. I don't really think I actually want to listen to what he has to say. Let's see what Connor has here. Oh, that Swiss yen. Yeah, he's still stalking that thing pretty heavily, yeah? Oh, I bet he just showed his face, didn't he? No. That guy's just witty. Oh, here we go. Here he comes. All the way back to the starting line. This is pretty much exactly where the market was before the news came out. It's such a the news. This news is like very, very predictable most of the time. Let's see what he has to say.
Dual mandate to promote maximum employment and stable prices for the American people.
You guys probably
The
can't
economy
hear
has
it
made
because I
clear
have headphones
progress
on.
toward our
So
dual mandate objectives. Inflation has eased from its highs without a significant increase in unemployment. That's very good news. But inflation is still too high. Ongoing progress in bringing
I know he's
earnings
been
into
saying
shore
since the beginning that
and the path
2%
forward
inflation
is
is where they're going to
uncertain.
start giving up on
I
the
want to
interest
assure the
rates.
American people that we are fully committed to returning inflation to our 2% goal.
Yeah, see 2%. I knew he was going to say
Restoring price
2%.
stability is essential
We
to
need to do
achieve
a
a
drinking game.
sustainable
Every time he
period
says the word
of strong
inflation,
labor market
2%, we
conditions
just
that
need to take a
benefit
shot or
all.
something. God, you beat
Today,
him
the
at once. Listen to
FOMC
that.
decided to leave our policy interest rate unchanged and to continue to reduce our securities holdings. Over the past 2 years, we have significantly tightened the stance of monetary policy.
We got to wait till the Q&A.
Our strong
That's when the
actions have
market's
moved
going to
our
start
policy
moving,
rate
probably.
well into restrictive territory, and we've been seeing the effects on economic activity.
Yeah, sorry. I don't know if you can. That's why I
As
turned
labor
closed
market
caption
tightness
on.
has eased and
I
progress
might
on
better fix
inflation
that
has
if I.
continued, the risks to achieving our employment and inflation goals are moving into better
Oops.
balance.
If I can type correctly.
I will have more to say about monetary policy
All right.
after briefly reviewing economic developments.
Input.
Recent indicators suggest that economic activity has been expanding at a solid pace. GDP growth in the fourth quarter of last year came in at 3.3%.
Which ones are my speakers? These ones?
For 2023 as a whole,
I think those are my speakers.
expanded at 3.1%.
These ones?
Bolstered by strong consumer demand
That's it.
as well as improving supply conditions. Activity in the housing sector was subdued over the past year.
You probably still can't hear very well.
High mortgage rates. High interest rates also appear to have been weighing on business fixed investment. The labor market remains tight, but supply and demand conditions.
We don't really need to listen to it anyways, like I said. We just want to know when the Q&A
Over the past 3
starts.
months, payroll job gains averaged 165,000
It's actually kind of
jobs
distracting.
per month, a pace that is
I'm going to turn the volume off for now.
seen a year ago, but still strong.
We can watch the closed caption, but I would actually
Unemployment
prefer
rate
to
remains
just look at the
low
charts.
at 3.7%.
Anyways. So,
Strong job
anyways,
creation has been
I
accompanied
got a
by
couple
an
different things
increase in
going
the
on here
supply
with
of
the euro
workers.
dollar. Let's go back to the
The
daily.
labor
We'll
force
kind of look at these
participation
dollar
rate
pairs
has
again.
moved up on balance over
So
the
the thing I
past
keep
year,
going back to is that if
particularly
this
for
really is a wave
individuals
2, then
aged
a wave 2
25
needs to take out the
to
low
54
wave
years.
4. It just pretty much needs to happen.
Immigration has returned
So
to
I almost kind
pre-pandemic
of think that
levels.
this could possibly keep going down.
Nominal wage growth
And this
has
might
been
even turn into a
easing,
much
and
bigger
job
thing.
vacancies have declined.
Now, on the
Although
other
the jobs
hand,
to
if
workers
today's
gap
news
has
does cause
narrowed,
this to go up,
labor
if it makes a
demand
big
still
and golfing
exceeds the
move,
supply
takes
of
out all
available
these,
workers.
previous candles, then I would definitely
Inflation
at
has
that point
eased
call this an
notably
ABC
over the
correction,
past year,
and
but
I would be
remains
more than
above
happy to
our
start looking
longer
for
run
longs
goal
for the
of
next coming
2%.
weeks and months for the continuation
Total
of
PCE
this
prices
uptrend.
rose 2.6% over the 12 months ending
I'm
in
still
December.
pretty bearish overall.
Excluding the volatile food and energy
To
categories,
me, that
core
kind of looks like an
PCE
ABC
prices
correction
rose
anyways. I mean, I kind of
2.9%.
feel like it's going to go down.
The lower inflation readings over the second half
I
of
was
last year
thinking
were
about going
welcome,
short to go when we got
but we
back
will
to the
need to see
starting line, which we're
continuing
pretty much
evidence
already
to
back
build
to the starting line.
confidence
So
that inflation is moving down sustainably toward our goal.
yeah, probably going to
Longer-term
try a little
inflation
bit of a trade on the
expectations
euro, see what
appear to
happens.
remain well anchored, as reflected in a
Give me a
broad
minute
range
here.
of
Like I
surveys
said,
of
sometimes during
households,
these news
businesses, and
events, I
forecasters, as
definitely
well
am busy
as measured
trading my
from
own
financial
analysis.
markets.
So if I go silent. Like I
The
said, I
Fed's
am definitely
monetary
a trader.
policy
So
actions are guided by our mandate to
let's
promote
see.
maximum employment and
I
stable
always
prices
I
for
like
the
to play
American
during
people.
these news events. I
My colleagues and
risk
I
way
are
less
acutely
money than
aware
I
that high
normally risk,
inflation
so it's not really
imposes
a big deal if I
significant
lose.
hardship
So
as it
I'm
erodes
not really too
purchasing
worried
power,
about it. But
especially for those least able to meet the higher costs of
sometimes you can make
essentials
some
like
big risk to
food,
reward
housing,
ratios
and
very
transportation.
fast trading these news
We're
events.
highly attentive to the risks that high inflation poses to both sides of our mandate.
Let's see.
And we're strongly
what
committed to
happens.
returning inflation to our 2% objective. Over the past 2 years, we have raised our policy rate by 5.25 percentage points, and we've decreased our securities holdings by more than $1.3 trillion.
All right.
Our restrictive stance
So
on monetary
anyways,
policy is putting downward pressure on economic activity.
so
and
if this
inflation.
does make an policy move up
Committee
with the breaker
decided at
structure, I'd be
today's
more than
meeting
happy to start
to
looking for
maintain the
buys.
target
But I am
range for the
definitely
federal funds
still a
rate
seller
at
because my
5.25 to
roadmap time frames,
5.5%,
these higher time frames have
and to
definitely
continue the
not told
process
me,
of significantly
even
reducing
give
our
me any
securities
reason to
holdings.
think that this is going up.
We
I mean,
believe that
we
our
are
policy
at the
rate is likely
70%.
at its
We
peak
do
for
have
this
all these
tightening
little
cycle,
spike
and
candles
that
here, but
if the economy
that doesn't
evolves
really tell me
broadly
that the
as
market's going
expected,
up at all.
it will likely be
So I'm
appropriate
definitely
to
still
begin
bearish until
dialing
proven
back policy
otherwise.
restraint
And for
at
me,
some
proven
point this
otherwise
year.
is impulsive, bullish,
But the
engulfing
economy
move
has
to the
surprised
upside on this
forecasters
around the
in
daily
many
time frame.
ways since the pandemic.
So
And ongoing
I'm still
progress toward our
bearish.
2% inflation
I am actually
objective
short the euro
is not
dollar.
assured.
I kind of expect the
The
euro dollar to
economic
go down
outlook
at
is
least a little
uncertain,
bit.
and we remain
Maybe
highly
it will go
attentive to
down,
inflation
bounce
risks.
off a fib level, and then
We are
go back
prepared
up.
to maintain the
Maybe
current
not.
target
I guess
range
we'll
for
have
the
to
federal
see.
funds rate for
When I
longer
look at all
as appropriate.
all the dollar pairs, I still kind of believe
As
that
labor market tightness
they
has
all
eased
need to go
and progress on
down.
inflation has
When you look
continued,
at the
the
pound
risks
dollar,
to
if this
achieving
really
our
is a
employment
1,
and
2,
inflation
3,
goals
4,
are
5
moving into better
of
balance.
1, and this really is a wave
We
2,
know that reducing
then it
policy
needs to
restraint
take
too
out the low of
soon
wave 4
or
because
too
that's pretty
much
much what happens on
could
every
result
single
in a
trend for the
reversal
most
of the
part.
progress we've
So,
seen
I
on
mean, it would
inflation
make way more
and
sense for me
ultimately
if this was a
require
1,
even
a
tighter
2, and then
policy
it went
to
up.
get inflation
So I'm
back to
still very,
2%.
very bearish on the pound
At the
dollar.
same time,
I would
reducing
definitely
policy
still be looking
restraint
for
too late
shorts.
or too little
And then you go
could
down to
unduly
the
weaken economic
Q&A
activity and
started.
employment. In considering any
You go down to the
adjustments to the
sort of time
target range for the
frames.
federal
The
funds rate,
pound dollar looks
the
like
committee
an
will
ABC
carefully
crescent
assess the
already.
incoming data, the evolving
I
outlook,
kind of
and the
feel like
balance
it's
of
more likely
risks.
it's going to keep going down at
The
this point.
committee does not
I mean,
expect that it will be
maybe. I mean, I
appropriate
wouldn't
to
be
reduce
surprised
the
if it went
target
up and
range
shook
until it
everybody
has
out and then
gained
went down
greater
later on.
confidence
But
that inflation is
see,
moving
look, you can already
sustainably
see the
toward
market's getting
2%.
volatile
We will
because the
continue
Q&A is
to
starting.
make our decisions meeting by
The
meeting.
Q&A is always when the
We
market
remain
starts getting
committed to bringing
volatile.
inflation back down
Always,
to our
always.
2% goal and to keeping
Everybody wants to
longer-term
know
inflation
what the
expectations well
what he's
anchored.
going to have to say.
Restoring price stability is essential to set the stage for achieving maximum employment and stable prices over the longer run.
See, I guess.
To conclude, we understand that our
To
actions
conclude,
affect
look, he's
communities,
already getting
families, and
almost ready to
businesses across the
conclude.
country.
Good.
Everything we do is in service to our public mission. We at the Fed will do everything we can to
Sometimes
achieve
these
our
things get
maximum
dragged on
employment
for
and price
45 minutes or more.
stability goals. Thank you. I look forward to our questions.
Now the Q&A starting. There we go.
Gina Smilik from the New York Times. Thanks for taking our questions. Obviously, in the statement and just in your remarks there, you note that you don't want to cut interest rates without greater confidence that inflation is coming down fully. I wonder, what do you need to see at this point to gain that confidence? And as you make those decisions, how are you weighing recent strong growth in consumer spending data against the sort of solid inflation progress you've been seeing?
Sorry, say that last part again.
How are you weighing the growth data and consumption data, which have been surprisingly strong, against inflation data?
Okay. So what are we looking for to get greater confidence? Let me say that we have confidence. We're looking for greater confidence that inflation is moving sustainably down to 2%. Implicitly, we do have confidence and has been increasing, but we want to get greater confidence. What do we want to see? We want to see more good data. It's not
If
that we're
anybody's
looking for
interested,
better
join my
data.
Patreon because
We're
we do
looking at
daily live
continuation of
streams.
the
We do a
good
live
data
stream
that we've
every
been
single
seeing. And a
morning
good
at
example is
7:30 a.m.
inflation.
UK
So
time.
we have 6
And we
months of
also
good
do
inflation
4
data.
live streams a
The
week,
question
Tuesday,
really
Wednesday,
is,
Thursday, and
that
Friday
6 months of good
at 1
inflation
p.m.
data, is
UK
it
time.
sending us
2
a
live
true
streams a
signal
week.
that
90
we are, in
minutes
fact,
during New
on
York and up to
a
2 hours
path,
during the
sustainable path down to
New York
2%
session.
inflation? That's the question.
And
the
it also
answer will
comes with a
come
trading
from
course, access
some
to my
more data
private
that's
channels
also
on
good
Discord, a
data.
ton of educational
It's not that the
information.
6-month data
So if anybody's
isn't
interested,
low enough.
definitely
It
check
is.
that
It's
out.
just
The
a
link is
question
in
of,
the
can we
chats
take that with confidence
and
that we're
in the
moving
description
sustainably
of
down
the
to
video.
2%?
I'll put it
That's
in the
really what
chats
we're
right
thinking
now.
about. In
Now, if
terms
you want to,
of
definitely join my Discord
growth,
channel. My Discord channel is
we've had
100% free to
strong
join.
growth. You
So the
take a step
second link
back.
is
We've
going to
had
be my
strong
Discord
growth,
channel, and you never
very
have to
strong
pay a
growth
dime
last
to
year,
join my Discord
going right
channel.
into the fourth
And I'm
quarter.
really trying to build a
And
community of
yet we've
traders
had a
that are
very
willing to
strong
help each
labor
other
market,
out.
and we've had
That's
inflation
why
coming
my
down.
actual Discord
So I
channel
think
itself is
whereas a year ago
100% free.
we were thinking
You
that
don't
we
have to
needed to
pay a
see some
dime to
softening
join
in
my
economic
Discord channel.
activity,
So
it
the link
hasn't
for
been the
that is the
case.
second link,
So
the
I think
Discord
we look at
.gg
stronger
forward slash
growth.
FX Pip
We
Collector.
don't look at it as a pout. I think at
100%
this
free to
point we
join.
want
You
to see
don't have to
strong growth. We
pay.
want to see a
And
strong
I'm
labor
looking
market. We're not
for
looking
to
for a
build a
weaker labor
community
market.
of
We're
traders
looking
that are
for inflation
like-minded, that
to
are willing to
continue
help each
to
other
come
out.
down
You
as
know,
it has
because
been
trading
coming
is
down for
definitely
the
not the
last 6
easiest thing in
months.
the world. So we definitely want to
And sorry, if I could just
do everything
clarify
we can
quickly,
to tip the
when you say
tables in our
that
favor.
you
So
want to make sure that it's a
definitely check
true
out the
signal,
Discord
is there
channel. Like I
anything
said,
you're
it
seeing
is
in data that makes you
100% free.
doubt that it's a true
Never
signal
had to
at this
pay a dime
stage?
in your life.
So I think it's,
You are more
I
than
would
welcome
say
to join my
it
Patreon service, which comes
seems
with
to be the
all these
likely
live
case
streams that I
that
do
we
every single
will
day,
achieve that
access to my
confidence, but we have
educational
to achieve it
information,
and we're
and you get
having that.
access to all my
And
swing
so,
trades.
I
But you
mean,
don't
it's a
have
good
to join.
story.
You
We
can
have
stay
6
a
months
free
of good
member for as
inflation,
long as you like.
but you can,
And
and you
please
know this,
join,
you
share
can
your
look behind those
charts,
numbers and you can see that
interact
a
with
lot
other
of it's been coming
traders,
from
talk
goods
to other
inflation,
traders,
for
share
example.
your
And
ideas.
goods inflation running
It's a
significantly
really great
negative. It's
community
a
of
reasonable
traders.
assumption that over
And I
time,
really want to
goods
build a
inflation
great
will
community
flatten
of
out and
traders that are
probably
willing to help
approximate
each other
zero.
out. So definitely
That would
check it
mean the
out. The link
services
is in the
sectors are going
chat
to
and in the
contribute more.
description.
So, in other words, what we care about is
I'm
the
still
aggregate
watching
number,
these
not
dollar
so much the
pairs on my
composition.
second screen.
But we just
Not
need to see
really
more. That's
confirmed
where
one
we
way or
are
another yet, huh?
as a committee. We need to see more evidence that sort of confirms what we think we're seeing and that tells us that we are on, gives us confidence that we're on a path to a sustainable
I
path
would
to
like
under
to
2%
see these things
inflation.
go break out on the daily, honestly. I mean, I would love to see this be the end of a Gretchen, because then I could literally know
Terrence,
that
Wall
I would be
Street
looking
Journal.
for longs probably
Chair
for the
Powell, it seems
next
to me you raised rates rapidly
probably
over the last
3 months
2 years
or
for two
so. You
reasons.
know, I'd be
One,
looking for longs
was
for
the
a long
risk of a
time if
wage
that
price
thing breaks
spiral.
out on the
Two,
higher time
there
phase,
were
but
risks of inflation expectations
I'm
becoming
not really convinced it's
unanchored.
going to.
This morning's ECI report for the fourth quarter shows
I think if
subject
anything, it
payroll
might just
growth
go
running
retest
at
the
a sub
highs and then go back
4%
down, but
pace. Inflation expectations are very close to where they were before the inflation
I think the
emergency
US dollar
of
CAD
the
maybe
last 3
just touched
years.
the
And
strip
given that you appear to
38%
have
and possibly go
substantially
back up. But
cut off these
like I
two
said,
tail
if this really
risks,
is the end of a
and
wave
that you've
two, I would
judged
love it.
here
And
today
if
current
today proves that
policies
this is
well
the
in
end of a wave
restricted
two, I would be
territory,
so happy
what
because
good
I would
reason is
literally
there
be
to
looking
keep
for
policy
shorts
rates above 5%?
for the next
Are we really
several
going to learn more
months
waiting
because this would most
6
likely be a
weeks
wave
versus
three
3
on the
months
weekly
from
time
now
frames.
that you have
And if that's the
avoided
wave
those
three on the
two
weekly, that's going
risks?
to be very, very good news for
So,
us. How about gold? What's gold up to? Did it break out?
as you know,
Not yet. That 78% is definitely
almost
still
every
holding.
participant on the committee does believe that it will be appropriate to
I
reduce
feel like
rates.
there's a pretty good chance it could
And
go down, but
for
we
partly
don't
for the
really know
reasons that you
yet.
say, you know,
And I
we
definitely
feel
do
like
think that
inflation
gold
is
is in a
coming
wave three
down.
on the monthly. So
Growth has been strong.
honestly,
Labor
if
market is
this
strong.
goes up, that's
Um,
another thing where, like, if it just
what we're
keeps on
trying to
going up,
do
I'd be
is
happy because
identify
then I would know
a
that I could
place where we're
literally be
really
looking for
confident about
longs
inflation
for
getting
probably the
back up
next
to
several
2% so
months on
that we
this
can
thing
then
because that would be
begin
a wave three of
the
wave
process
three.
of dialing
A
back
wave
to a
three is
steeper
supposed to be the
level.
strongest wave of a trend.
So
So when you get a wave three of
overall,
wave three,
I think people do believe,
that's
and as you
very,
know, the
very good.
median participant wrote down 3 rate cuts this year.
So we got to watch and see, I
But
guess.
I think to get to
Like I
that place
said,
where we feel
I
comfortable
expect
starting the
that gold
process,
could
we
go
need some
down, maybe just
confirmation that
retest the
inflation is in
highs,
fact coming down
maybe even retest this high.
sustainably to 2%.
If I could
But if it
ask
doesn't, and
quickly,
if it breaks out on the
if you
daily,
hold
then
rates high
probably
as
starting
inflation
tomorrow, I'll be
moderates
looking
as
for
it
longs
has
for
been,
quite some time.
target rates will exceed the
Like I said,
prescription
because that pretty much
tailored dollar
confirms.
experience. What would be the reasoning for holding rates higher than the levels
Oh, you could
recommended
hear
by
it on my
most
system?
schools
Oh, I'm going to have to
in
switch
the
back.
current instance?
Well, look, I think, as you know, we consult
You
a
probably can't
range
hear
of
it very
Taylor
well
rules
now. I'm
and
probably better off hearing
non-Taylor
it
kind of
through my
rules.
speakers.
We consult them regularly.
Thanks,
They're in
menu.
our
I
teal
didn't even
book
notice that.
they're in all the materials that we look at. But you know, I don't think we've ever been at a place where we were setting policy by them. And they're depending on the rule, it will tell you different things. There are many different formulations. Another way to think about it is implicitly is so.
Headphones right there.
In theory, of
There we
course,
go.
real rates go up if holding all else equal as inflation comes down. But that doesn't mean we can mechanically adjust policy as real rates, as inflation comes down. It doesn't mean that at all because
Hopefully you guys can hear that.
we don't know. We look at more than just the Fed funds rate. We look at broadly financial conditions. But in addition, we don't know with
What's
great
the sentiment
confidence
on
what
these
the rate of
things?
interest is at any given time. But that also doesn't
What's
mean
the
that
market
we've
thinks
waited
going to happen?
enough to see,
Well,
the
what's
economy
retail
turn
thinks
down,
going to
because that
happen
would
at
be
least?
too late. So we're really in a risk
Oh,
management
look at the
mode.
yield dollar,
We're managing the
50-50.
risk
Nobody nobody has
I
a clue
mentioned in
what's
my
going to happen, do they?
remarks, managing the risk that we move to
Oh, everybody's short on the pound. No, I don't
and I
really
think
like
to
that.
move, which is where almost everyone on the committee is in favor
The
of
US dollar
moving
CAD's
the
almost
rate down
50-50
this year.
too. Market doesn't have a
But the
clue what to
timing
do,
of
do
that
they?
is going to be linked
Retail.
to our gaining
Most people are
confidence that
long on
inflation
the
is
Aussie.
on a sustainable path down to 2%.
About gold. Everybody's short on gold.
Thanks, Chair Powell. I'd like you to key in on the use of the word in the statement that inflation still remains.
I like to trade against retail.
You've pledged to cut rates.
If I see retail really
reach
weighted to one
2%.
side, I like to trade
So
the
that
other
implies
direction.
that there's some sort of intermediate step here on inflation, and that.
So let's watch this for a
would
few
be
and see what happens,
commensurate
I
with
guess.
the change in the statement language that inflation.
Unfortunately, this
remains
Q&A will
elevated.
probably
What's the
last a
step
little
down
while.
from there?
Yeah, I don't know that we've worked out the particular statement language and that kind of thing. I would just say, if you look at where 12-month inflation is, and it's still well above core is 2.9%, for example, 12 months, which is way down from where it was. Very, very positive development, very fast decline, and the case is likely that it will continue to come down. So that's where it is. But we're wanting to see more data.
So if I could follow up on that, the statement allows that you want greater confidence on inflation falling before you cut, but it doesn't mention the other side of the mandate, a slide in employment. Would a slide in employment also bring you to the point of cutting rates?
Yes. So let me say that we're not looking for that. It's not something we're looking for. But yes, if you think about, in the base case, the economy is performing well. The labor market remains strong. If we saw an unexpected weakening,
Here comes 2% inflation, I bet.
in the labor market,
Go
that
on,
would
say it.
certainly weigh on cutting sooner. Absolutely.
Oh, here we
If
go. I forgot
saw
all about this. Hold on.
inflation being stickier or higher.
This
or,
is my favorite thing to do during these news
those
events.
sorts of things would argue for moving later. In the base case, though, where the economy is healthy and we have
Come on, he's moving too
ongoing
much.
growth, solid growth.
Usually he
we have,
stays still.
a strong labor market. We have inflation coming down. That's what people are writing their SEP around.
Look, he's moving
And
too
in
much.
that case, what we're
Shit.
saying is, based on that, we think we can and should take advantage of that and be careful as we approach that question of when to begin to dial back restriction.
Claire Jones, Financial Times. Just to circle back to the greater confidence aspect of the statement, there's been a lot of unanimity in recent meetings. I'm just wondering, going forward, when it comes to all needing greater confidence, is the unanimity, or at least consensus among FOMC members, about what the threshold for that greater confidence is? And if not, could you maybe tell us a little bit about the discussion today on, what the variations between FOMC members was on what constitutes enough confidence to cut rates, and also if there was any variation on how quickly that greater confidence threshold could be reached. Thank you.
We're not really at that stage.
Dollars on hold.
There was no proposal to cut rates. Some people did, talk about their view of the rate path. I would point you to the SEP as good evidence of where people are, although it is one cycle later. So, we're not at a place of really working out those kinds of details because we weren't actively considering, moving the federal funds rate down. I will say there is a wide disparity, a healthy disparity of views, and you see that in public statements, in the minutes, and the transcripts when they're released every 5 years. So we do have a healthy set of differences, and I think that's actually essential for making good policy. We're also able to reach agreement generally because we listen to each other, we compromise, and even though not everybody loves what we do, they're able to, for the most part, able to join in. And to me,
Not
that's
everybody loves what we do.
A public institution.
That's an understatement.
Hi, Chair Powell, Rachel Siegel from the Washington Post. Thanks for taking our questions. So over the past few years, there have been all these real-time indicators that helped us gain a sharper understanding of where the economy was, like open table data or office attendance. You've talked about vacancies in the past. And I'm wondering,
I still think that it's going to go down.
What might be on that dashboard for you that's giving you the clearest picture of the economy?
I think the dollar's going to go up.
You could touch on that.
Including?
Rent. Rent costs.
Yeah. Well, so we're not, it's not the pandemic, so we can actually rely on more traditional forms. People are working, they're getting wages, and the economy is largely reopened and is broadly normalizing, as you see. So I wouldn't say we're looking at that sort of more innovative data as much. You point to rent, so of course we follow the components of inflation very carefully. which would be goods inflation. I talked about that a little bit. You mentioned housing inflation. So the question is, when will these lower market rents find their way into measured rents as measured in PCE inflation? And we think that's coming. And we know it's coming. It's just a question of when and how big it'll be. So, but that's in everyone's forecast, I would say. So that will help. But at the same time, we think goods inflation will probably, it's been giving a lot of disinflation to the effort, and probably that declines over time. But it may well have some more time to run. You know, the supply chains are not perfectly back to where they were. In addition, it takes time for the healing process to get into prices. So there may be still a tailwind. We'll find out with that. So we look at the things that relate to our mandate very carefully, and as you would imagine.
I guess just as a quick follow-up, do you feel comfortable at this point saying the economy has reached a soft landing, or is that part of looking for more confidence?
No, I wouldn't say we've achieved that, and I think we have a ways to go. Inflation is still, core inflation is still well above target on a 12-month basis. 12 months is our target. Certainly, I'm encouraged, and we're encouraged by the progress, but we're not declaring victory at all at this point. We think we have a ways to go.
Thank you, Mr. Chairman. You've said that you would know the neutral rate by its works. So I'm wondering what you could tell me. How do you believe the neutral rate is working? We're telling you right now that growth is stronger. In other words, how much is the economy really being restrained right now by the current funds rate? And how much restraint does it really need additionally if inflation is still coming down?
So I think you do see in the interest-sensitive parts of the economy, you do see, for example, housing. You see the effects. You do. Your second question, though, really, I think is important, and that is a lot of this has come through, a lot of the disinflationary process has come through the healing of supply chains and also of the labor market. So you've seen that other set of factors is really different from other cycles and has brought that working with tighter policy, which has enabled the supply side to recover, I think is that mixture has been behind what has enabled this. So no, we really do think that we're having an effect broadly across the economy. I would point to the interest-sensitive parts of the economy as well as spending generally. But it's a joint story. It's a complicated story.
But how much restraint are you actually imparting to the economy, would you say, relative to the neutral rate?
So I think it's of course that it's not something you can identify with any precision. But a standard approach would be to take the nominal rate, 5.3%, let's say, and subtract sort of a forward measure of inflation. If you do that, and there are many, many ways to calculate that neutral rate, but that's one I like to do. And you're going to get to something that is materially above mainstream estimates of neutrality, of the neutral rate. You will. But at the same time, you look at the economy and you say, this is an economy that grew 3.1% last year. And you say, what does that tell you about the neutral rate? What's happening, though, is the supply side has been recovering in the middle of this. So that won't go on forever. So a lot of the growth we're seeing it isn't just a tug of war between interest rates and demand. You're getting, more activity because of labor market healing and supply chains healing. So I think the question is when that peters out, I think the restriction will show up probably more sharply.
Thank you. Sorry. Thanks for taking the question, Mr. Chairman. You mentioned earlier we're not seeking a weaker labor market. I think you said. Can you talk a little bit more about that? Do you think the labor market now is back to quote unquote normal, and that we can achieve the inflation target without wage gains coming back down to what they were pre-pandemic? Even with today's ECI levels, they were still above those pre-pandemic levels.
I think the labor market by many measures is at or nearing normal, but not totally back to normal. And you pointed to one or more of them. So I think job openings are not quite back to where they were. Wage increases rather are not quite back to where they would need to be in the longer run. I would look at it this way though. The economy is broadly normalizing, and so is the labor market. And that process will probably take some time. So wage setting is something that happens, probably will take a couple of years to get all the way back. And that's okay. That's okay. But we do see, you saw today's ECI reading, the evidence is that that wage increases are still at a healthy level, very healthy level, but they're gradually moving back to levels that would be more associated, given assumptions about productivity, are more typically associated with 2% inflation. It's an ongoing process, a healthy one, and I think we're moving in the right direction.
So that process can continue without a weakening of the labor market, basically, you're saying?
Well, I think the labor market is.
Don't forget to join my free Discord channel.
Clearly,
There is 4,626 members right now, and I also live stream on Discord also, so that way you probably don't have to watch the ads if you're watching it from there also. So that's definitely an advantage of being part of it. And like I said, I am definitely trying to build a community of traders that are willing to help each other out. So if you enjoy, talking about trading and sharing your charts and listening to other people's ideas, then that is exactly the type of person I'm looking for. So definitely join 100% free. Never have to pay a dime if you do not want to. You can stay a free member of my group for as long as you want. You can be as active as you want. You can share any analysis you want. So definitely check that out. Like I said, 100% free. The link is in the chats and in the description. It's discord.gg/FXPIPCollector.
Very strong labor market. It's still a good.
Thanks a lot, Christopher. I appreciate that.
Finding a job, but it's getting back into balance. And
yeah, definitely. I really enjoy trying to read these markets, and I really enjoy being part of a community of traders too, which is really the reason why I started this in the first place, because of I really enjoy being part of a community, definitely.
Levels, but back down to where would be consistent with where we were before the pandemic and with 2% inflation.
Hi, Chris Rugaber at Associated Press. Thank you. I wanted to follow up on Rich's question. It sounded like you suggested that you're not worried about faster growth so much. So wanted to see if you're seeing anything that suggests that inflation...
Getting close to the end of the... Getting very close to the end, I think.
You're not worried that solid growth from here on out poses any risk to inflation. Thank you.
No, I think that is a risk. The risk that
welcome all new members. Thanks for joining. I see we got some new people in the group. Welcome.
That it would stabilize.
Thank you for joining. I appreciate it.
2%. That's to me more likely. Of course, if
like I said, 100% free.
Inflation.
I mean, I definitely wouldn't mind if you joined my Patreon, because the more the merrier. I mean, like I said, I do London live streams every single morning, and I also do New York live streams every single day except for Monday. So,
I think both of
like I said, you do get a wicked lot for your money. So, and it comes with a trading course and all kinds of educational information. So,
6 good months.
You definitely get a lot for your money for sure.
What's really going to shake out here?
I try to work hard to make good analysis and good forecasts for people.
Are the last 6 months
hopefully, so that way you can become consistently profitable traders also. That's the goal, I guess, for everybody.
That's not what we think, but that's the question we are asking. We have to ask, and we want to get comfort on that.
And just one quick follow-up. Governor Waller had mentioned the revisions that are coming on February 9th for the CPI data. Is that something you're watching?
So hopefully this will be over in the next 10, 15 minutes. Like I said, it's so boring. I hate watching these things.
Where things are going?
Normally I don't even have the volume on.
We look at those last year.
Hey Savu, how's it going? You still watching the live stream?
A surprise.
I got the pound dollar up right now. I do believe this is an ABC correction. Savu, is that how you pronounce it? I think the pound will go down, personally.
From your point of view now,
maybe not for a long time, but at least for a few days, I think. I'll have to find out in a little while, but give me a little thumbs up in the chats on Discord if you're watching the live stream and you're seeing my pound analysis for you. Sweet, nice.
And there are those on Wall Street.
Yeah, that's kind of what I expect to happen. We'll see. Like I said, if it does go up, I will be happy to start looking for longs. But
with inflation running below your target.
Because on the daily, I mean, yeah, maybe it will go up, maybe it will break out, and if it does break out, I'm going to be looking for longs for several weeks.
So I guess I would just.
So I personally think it is going to go down because it's not big enough yet. But
over the course of last year. the labor market, 3.7%.
Yeah, I'm not sort the pound. I'm sort
indicates
the
that
euro
the labor
dollar,
market
but
is strong. We
same
have
thing
just
though.
over 2 years now
I'm sort the
of
euro dollar, which
unemployment
is
under
the same thing.
4%. That
The
hasn't
only
been
reason I chose the euro dollar is
50
because
years.
actually,
So
if you look
it's a
at
good
the
labor market.
indexes,
And we've seen inflation come down on top
right
of
here,
that.
which these are my own personal
6 months of
indexes
good
that I made
inflation
using
data and the
TradingView.
expectation that there's more
If you look at the
so
euro index, the
this
euro
is
index
a
is
good
actually
situation.
the euro is definitely,
This is a
as
good
of right now,
economy.
the weakest
But
currency.
what's the outlook? That's looking
Definitely.
the outlook. We do
I mean, we
expect
are
a
at the
decline.
78%, so I
Have
mean, maybe
expected
we'll
it
get a
for
bounce
some
right
time,
here.
as
But
I
right now,
mentioned.
the
But we do
euro is
expect
definitely
that
the
it will
weakest currency out of the bunch for
moderate
sure.
as supply chain and labor
And I live
market
in Europe, so I
normalization
mean,
moves
that doesn't
course.
really say much. But
The labor market is
yeah,
rebalancing,
definitely,
as I mentioned.
as of right
Inflation has
now,
slowed. The base of job
the
growth
euro has
is
definitely
narrow.
been better for sorting for the
And
last
of
few
course,
weeks.
12-month
That doesn't mean it will
inflation
stay like that. Like I
is
said, that
above
you could get
target
a bounce
and
at the 78%
getting
level.
down
But
closer to target. It's not
whoops,
a
I want to keep
guarantee,
this one
but
on the
we seem
indexes.
to
Sorry
be
about that.
getting on track for
Keep
that.
that
So
on there
those
and
are
then
the
go back to
risks
here. There we go.
and questions we have to answer. But overall, it's a pretty
Oh,
good
your
picture.
last name
It
is
is a good
Savitz. I thought
picture.
you were saying that this is
Your
Savitz.
second question was, sorry.
Nice.
Could you get inflation that is below target, end up with inflation
Oh,
above target,
wow.
and you have
You
to
just,
do
thank you for
something
the
about
super
that?
chat. I really
So
appreciate that.
the thing is,
That's
we're
awesome.
not
Thank you
looking
very
for
much. That's
inflation to
awesome.
tap the 2% base once.
I'm going
We're
to start
looking for
doing
it to
these
settle
evening
out
live streams
over
more. I got to
time
try to figure out whether
at
people,
2%.
I want to do a
And
survey
the same thing is true. If we have a
and I
little
want
bit
to find out
stability
whether
when we
people
have that
prefer my
now
top three
of
recap
inflation
videos
that's
that I do every
annualized
single
at
night.
a lower
If
level,
anybody follows my
that would
channel,
be
I
good.
do three recap
We're not
videos every
looking
single
to
night, usually
have
only about a
inflation
minute
anchor
long
below
each.
2%. We're looking to have it
Or would
at
people
2%.
prefer me to
And then
do like
diffuse those
a
circumstances
30 to
to
45
deal with
minute
it.
live stream
I think
every
as
night?
of now,
At least every weekday night,
of
like
course,
Monday,
we want to take
Tuesday,
advantage of this
Wednesday, Thursday
situation
night.
and finish the job on
So
inflation while keeping the labor market
I got
stable.
to try to figure out whether people would prefer the three recap videos or whether people would prefer a live stream. I can't really do both. It's a little bit too much to do both. But if anybody has an opinion, put it in there. Like I said, if anybody follows my channel, if anybody knows how things work on my videos, then let me know. I'm probably going to put out a like a survey so
I
that way
included
people
that
can tell me
language on your first
what they
question.
think.
We included that language
Either top three
in the
videos
statement
at night or live
to
stream at
signal
night.
clearly that
Kind of up to you
with
guys. I'm
strong
gonna leave it
growth,
up to
strong labor market,
the
inflation
community.
coming
See
down,
what they
the
want.
committee intends to move carefully as we
Look at
consider
that. Oh man,
continuing
I
to
think
adopt
anybody that went short, anybody that's
the
following
restrictive
along,
stance
definitely
that
is
we
doing
have in
pretty good.
place. So if you take that to the current context,
Yeah, I don't really
and
play that game
we're going to be looking at this meeting by meeting.
because I am
Based on the
American,
meeting today,
and
I can
usually
tell you
like
that
every 3 months I
I
transfer
don't think
dollars
it's
into euros
likely
to fund
that we
my
will reach a level of
European bank
confidence
account.
by the time of
But
the March meeting.
I don't
Could
really
take
try to
hard
catch the
marches some
highs and the
time to do
lows
that,
when I do it. I
but
mean, it's kind of
that's to be
just
seen. So I
yeah.
wouldn't call when you
But I
look
do
at
admit
a
that a year ago
near
when
term
the euro was at
area news
parity, I
watch, I
definitely
would
made a
say
big transfer to Europe
I
so that
don't
way
think
I
that's
could
it's probably not the most
have
likely
cash in
case of what
Europe
we would call the base
because
case. Then your
not
second
too
question
often
is
$1 gets you 1 euro. That's for sure. That's a good deal. Look at that, man. Anybody that went short because of my analysis,
that's going to depend on the
anybody
market.
that's following
The whole
this
thing is
analysis,
this is going to
anybody that's
depend
been
on
in
the
this
data.
live
We're going
stream
to be
following
looking at the
along, I think is
economic
pretty
data
happy.
as it
At least
affects
right
the
now, they're pretty
outlook
happy.
and the balance of
I
risks
know I'm
that
pretty
the
happy.
market's
I'm
looking to
short the
face right
euro.
now. And
Pretty
if we
much
do
right when
that,
when the
we'll
euro
monitor
went
the
back to break
ECP
even, that's when it
at the
went back
March
to the
meeting,
beginning.
and
That's what I
people will write
sorted
down
it.
what they think. But in the end, it's really going to
So
depend
definitely pretty
how
happy
the
about
economy
that.
evolves. We talked about
That's
there
going
are
great.
risks that would cause us to go slower.
Like I
For
said,
example,
anybody that's
stronger
following along
inflation,
should be pretty
more
happy with
persistent
that, for
inflation.
sure.
There are risks that would cause us to, or if they happen, that would cause us to go faster and sooner, and that would be a weakening in the labor market, or for that matter, very, very persuasive
As soon as
lower
this speech is
inflation.
over, hopefully we'll
Those are
better
the
find
kinds
out
of
whether
things. So
these moves are going
we're
to
just
hold
going
or
to
not.
be reacting to the data. That's really the only way we can do this.
Yeah, it kind of depends on what you want to do, whether you want to hold it for a day trade, whether
Hi,
you
it's
want to
Ray
swing
Gordell with
trade it.
Portico. Could you talk a little bit more about productivity growth? You've mentioned
I
multiple times
usually,
about, the
for
level
all
of
my
wage
members,
growth
I
that's
have a
consistent
scaling
with
out
2%
technique so that way
inflation.
we
We've
become risk
obviously
free.
seen,
And then once you're risk
increasing
free, I
supply
kind
this
of would
morning
prefer to let it
Inflation's cooled
run.
a little bit, but still sort of
I would
above
like to
where we
think
wanted
that
to
it would go
see.
down to
Growth has
take
been
out
very
these lows
strong.
right
How
here.
much of those
You know,
gains
possibly all the way down to
due to
78%. That's what I
productivity,
would like
and
to
do
think.
you see that productivity
Um,
as sort of
and actually, my real
temporary
target
because
would
of
actually
factors
probably
you
be way down here,
labor
but that's
and
kind of the
supply chain
pie in the
factors you were
sky
talking
target.
about,
But
or do you think that
I would say the
growth will
1.257
fade
area is
over time?
pretty likely if this
So
move
this is a
holds.
really interesting
Kind
question.
of a
And
big if right
I
now. We
think
kind of got to see what happens.
my
But
own view is, I think if you look back to the pandemic,
If this move holds, then
saw
it should continue
a
down. Maybe
spike in
even take out the lows
productivity
on the daily.
as workers were laid off and
It may even
activity
take out these
declines.
lows right here
And then
eventually.
you saw a
Or it
deep
may even
drop
take out these
in
lows. Honestly, maybe
productivity.
more likely it
And
takes
then
out
over the
these lows.
last, you saw high productivity last year in 23.
We'll see
So I
though.
think
This move hasn't
we're
really
basically in the
held yet.
throes of getting through the pandemic economy. And the question will be, what is it that has changed?
Yeah, I
And
don't know.
productivity tends
That
to
is
be
kind of
sort of
risky
the
to get in another
fundamental
sort now.
aspects to
Maybe
it.
if you saw the
Is
decent
there
pullback
a
on the 1
case that
minute, but yeah,
will
I
it
don't
be the
think I
case
would
that we
sort it
come
now.
out of
No,
this
definitely
more
not.
productive, more on a
I don't like to
sustainable
chase the
basis?
market
I don't know. I don't know.
because you don't know what could
I think it
happen.
would take,
It could
people
it could
taking it too
literally
high.
turn back
But
up. I mean, who the heck
my
knows?
guess is
We can
that
make
we
we can make
actually
some really
pull
good
back even
educated
more
guesses,
because
but
I'm not sure I see where
I
things
definitely
go.
wouldn't
But this
sort it
is
here.
a
I
big
sorted it way up here
productivity
when
increase. So
I didn't even trade the pound
AI,
dollar. I actually traded the euro
artificial
dollar, but
intelligence, generative may
I
be
waited for it to come all the way
popular in the
back up
short
to the
run,
starting
but
line
maybe
where
in
it
the
was
longer
before
run.
the news was
So
out, and then I sorted it.
I'm not seeing
And
where
then it
right
did go up quite a
right
bit
now.
after I went
I would
saw it.
say the
But my
productivity
stop
really
loss was
falls out of
way up there. It was like
broader
40
forces
pips
that
or
are
something up
driving
there. I used a big
heating up
stop
the
loss at
labor
the
force
news.
and activity returning
And
and
yeah, it's going
things
pretty
moving.
good.
Right. So would that be behind why we've seen
Maybe
such
if you see
strong
a
growth,
decent
but we've
pullback on the
also
1
seen
minute,
inflation fall?
I would have to see a
Maybe there's
pretty
just
decent
been a little
pullback to get a
effect of
sword
That's one way
again.
to look at it. Yeah.
Something like I would have to see something like this to go sword again on the 1 minute.
Hi, Chair Powell, Nancy
I don't really scalp
Rensler
the
from
lots, to be
Lexington.
honest with you.
I want to ask a
I'm
little
definitely a
bit
swing
more
trader for
about
sure.
housing. I'm wondering how closely are you watching rent and housing prices as you evaluate whether and when to cut rates? And is it
Thanks a lot,
because
Saville.
prices are
Definitely, I
not
appreciate it.
coming down as quickly as you expected?
I like the community, like I
So
said. I
when
mean,
we think
obviously, I
about
have a Patreon, and anybody that joins my Patreon, it's
our,
is
our
income for me.
statutory
But
goals are maximum employment and
I
price
do a lot
stability,
for
and
my
that's what
members.
we're
Like I said,
targeting.
I do
We're
9
not
live streams
targeting
a week.
housing
I
price
do a
inflation,
London live stream every
cost of
single
housing
morning at
rate increases.
7:30
Those are
a.m.
very
And I
important
do
goals for
a New
people's
York live
lives,
stream 4 days a week
but they're not, that doesn't
at
allow me to
1
reflect.
p.m.
We're also well
So,
aware that
and it also
when
comes
we
with a
cut rates
quick
at the
trading
beginning of the
course, which
pandemic,
most
for
traders, if
example,
you look
the
on YouTube, most traders are
housing
selling their
industry was
trading
helped
course for
more than
like
any other industry when
hundreds
when
and
we
maybe
raise
even
rates.
thousands of
The
dollars.
housing industry
I give it to you for
is
free when you
is
join my
very
membership.
interest
You
sector.
could join my membership for
On
one
top of
month,
that, we
pay
have
$50
ongoing
for one
problems
month of
with the
membership, and
availability of housing.
get my trading course for
We have a
free, and then keep it
built
for
up
life.
set of
I'm not
cities
going to take it away from
people
you.
are moving further and further out.
So
So
it's a really good
there's
deal,
there
definitely.
hasn't been enough housing
And
available.
I also have
These
a
are
ton of
these are not
educational
things that we
information,
want
access to
builders
the
to
private
address.
channels, all
But
kinds of good stuff. So
where it comes into
definitely
play
check it
most
out, and it's
clearly
no
in our
obligation
work
either. You can join for
is
1 month and
inflation,
quit
which
if
is a
you like, if you
combination.
don't like it.
It's really rental inflation,
But those
taking
live streams are really
employers' equivalent
beneficial, and I
rent
like
and
doing them
short rent
because
being paid by tenants,
a lot of times the other
we're
people
running
in the
that
group
through
that have a lot of
CPI
experience will
calculations
share
and
their
also
analysis on the
inflation, the
live
one
streams
we
too,
look at.
which is really good for
And what that's
everybody.
telling you is that market
Sometimes
rents
somebody
are
else's view on the
increasing
market
at a
will
much
totally
lower
open
rate
your
or
eyes
even
up and
being
be like, "Oh,
flat,
you are
and
totally right
that
about
will
that,"
show up in
and
inflation
they'll
over
see something
time. It
that you
has
don't
to,
see. So it works out
as
really
long as
good.
that remains the case. So.
And just real quick, what is your response to the letter that was sent to you by some members of Congress
Oh wow, big
asking the Fed
bully,
to lower
big
interest
bully. That's
rates to the
awesome. I
housing
love to hear
market?
that stuff.
My response is what I started with, which is that our job, the job Congress has given us, is price stability and maximum employment. Price stability is absolutely essential for people's lives, most importantly not most importantly, mostly for people
Definitely
at
join
the
my
lower
Discord
income
channel. Like I
spectrum
said,
who
feel
are
free to
living
join.
at
Say
the
your
lowest
analysis. It's
margins.
100%
So
free. Say
for
your
someone like
analysis.
that,
Say your
high
charts.
inflation
Say your trade ideas.
in the necessities of life
Chat with other
rarely
people in the
occur because
group.
even middle class people have some
The more the
scope
merrier,
to
definitely.
absorb higher costs. So we have to it's our job. It's what
Like I said, it's nice
gets
to
us
build a
stability
community.
is to get inflation
Trading is
down. The
difficult. The
tools that
more
we use to do it are
teamwork makes
interest
for
rates.
dream work. So
So
community
that's
is
how we think
great.
about that.
Definitely.
Courtney Brown from Axios. Can you give us some insight into whether the committee discussed the possibility of slowing balance sheet runoff in the months ahead?
Yes.
My God, is this guy ever going to stop talking? We'll see. Like I said, this could reverse. I mean, if this is a 3, 4, 5, it will reverse. So definitely definitely don't go short now. I'm short since up here, so I mean,
where questions are beginning
and
to
I'm
come
already
about
taking a little
greater
bit off the
focus
table,
about the
so
days of
it's
runoff
mid-street
going
now, so I don't really
At
care
this
too
meeting,
much.
we
But
did have some discussion of the balance sheet. And we're planning to begin.
I kind of feel like it may break out and keep going down, but you really don't know. And they possibly could turn back up.
Questions are all coming into scope now.
I don't really think it's going to, but
we're at the beginning of that process, I would say.
Quick follow-up. Is
yeah, you can pay with cryptocurrency. You can pay with USDT. That's Moo. I will take USDT with the ERC one.
Yes, we see those as independent tools.
As payment, but you have to pay for at least 3 to 6 months at a time, because I can't be tracking people down every month for payments, because I'm way too busy with my own trading and live streams for other people. So, but I will take cryptocurrency if you're willing to pay for 3 to 6 months at a time. So that way, every 3 months I can just contact you when payments due.
As I said, we'll be looking into that as a committee.
But like I said, join my channel. It's free. No problem. I'm not going to force anybody to buy anything. That's kind of the thing I like about my channel is you can join for free. Stay a member. Interact with other people. Say your analysis. Learn from people. Talk to people. It's really a great community.
The implication is that 8 good months might not be enough either.
I'll put the link in the chats one more time, just in case anybody missed it, to my free Patreon channel, my free Discord channel, that is.
I'm just going to say, it's not that we don't have any confidence.
Discord.gg/FXPIPCollector. So check it out. 100% free to join.
To start the process of dialing back on.
I'd like to see 10, 15, 20,000 members in there someday. Everybody helping each other out. All free members. Would be really cool. Hey, Big Boss. Thanks a lot, buddy. I appreciate it.
Progress on inflation. We just want to make sure that we do.
I'm glad to hear. I really like hearing when people are, making some money with my analysis, because trading is difficult. I mean, you can't say trading's not difficult. It has psychological issues and everything else. So the community makes a big difference when it comes to trading. Big time. I was in a community for over 10 years before I created my own community, and it was so beneficial to be in a community of like-minded traders.
With a couple $100 billion there.
Not a decision that we think we.
My God, he keeps going on and on and on.
I mean, if it were to stabilize at a different level, but that's.
I'm gonna have to start drawing on his face again just to keep myself occupied.
A whole range of issues will be briefed up, and the committee will get into all of the issues that will be arising over the course of the next, let's say, year or so.
Thanks, Greg Robb from Market Watch. Chair Powell, I want to change gears a little bit. In the presidential primary campaign that's been going on.
Oh, now they're talking about the election.
Your name has come up often, and many Republican candidates had said that they probably wouldn't want to give you a third term. So I wanted to give you a chance to talk about that. Do you want
That's kind of fun. What a question that is.
On the Fed, what's your stance on that?
I don't have a stance on that. It's not something I'm focused on. Focused on doing our jobs. This year is going to be a highly consequential year for the Fed and for monetary policy, and we're all of us very buckled down, focused on doing our jobs.
Thank you, Chair Powell. Jennifer Schonberger with Yahoo Finance. As you mentioned, core PCE has been running at 1.9% over the past 6 months, and you guys are actually expecting core inflation higher this year at 2.4% compared to that 6-month measure. Given that forecast and that the median is for 3 rate cuts this year, what happens if inflation stays where it's been over the last 6 months for the next 6 months?
So we'll update our inflation forecasts at the next meeting. You referred to the December meeting. That's 3 months old, so it might be lower now given the data we've gotten.
Oh, the yen pair. Sorry, Connor. I didn't even notice.
Reacting to the data.
I was too busy daydreaming about Watson Powell.
Data and it kicks back up, then
I feel like this is going to be over pretty soon.
If we got really good inflation data soon, that would tell us that
we could make my screen bigger. I can't look at that little screen. I got to delete the devil horns.
All the other factors. We're setting policy based on the totality.
All right, I can still hear them, so I'll know when it's over.
But just to follow, if inflation stays where it is
currently, again is like right at a fib level. That's a good sign right there, right at the start, isn't it?
factored in.
Well, I think if we
Pound
came
yen
to the
too. I
view
mean, it might be a couple
that
pips off,
inflation
but boy,
that the 6-month inflation numbers, which are very close to
I
2,
don't really like the
were
Aussie yen and the
in the
Kiwi yen,
PCE
but
world.
I know what you're
If we
looking
came to
for
think that
anyways,
that's,
obviously, but
if we thought that is really
I'm
where
trying to see what they
maybe
all
our
look like.
policy
Boy,
would be
the
in a different place.
CAD yen kind of looks like
But
maybe it
that's the
could
whole
push
point,
down
is
a
we're
little more.
trying to
I mean, I guess
get
the euro
comfortable
yen and the pound yen
gain
could possibly push
confidence
down a few more
that
pips
that is
too,
where that
and
inflation
then
is
go
on a
up.
sustainable path.
But you do definitely see higher low wave C's quite often, so you can't really say that for sure.
Hi, Chair Powell. Daniel Davis, Agence France Presse. I just wondered if I could get your comment on the recent consumer confidence data. It seems to suggest that consumers are sort of moving towards a much more
Alright,
optimistic view
Swiss
of the
yen.
economy. I just wonder, is it fair to say that they're moving
Ooh,
towards
look at where
maybe
we're
a better place
sitting,
to have been
man.
in recent
Look at where we're
months?
sitting, yen
And
berry.
do you think that
Oh,
inflation and falling
man.
inflation perhaps
You probably
play a
got
role
some
in that,
trend line
and
coming
what
across here
challenges do you
too, don't
see
you?
going forward? Thank you.
Something like that, maybe.
Yeah, so it's been interesting that
Nice.
confidence surveys have been
We are
weak
sitting
at
right
a
at the
time when
100%
unemployment has
Fibonacci
been
extension.
low,
I mean, we can't really
very
say
low,
that that's for
historically
sure
low
going
for
to
a couple of
hold, but
years.
boy,
But nonetheless, that's been the case.
it's a good
And we
chance
asked
it's going to
ourselves
hold.
why that is, and
And I can
the
see
real
a 1,
obvious
2,
answer,
3, 4,
we don't
5,
pretend to
A,
have
B,
perfect
C.
wisdom on this,
And this is so
but the
impulsive that you
obvious
can't
answer
really
is
count the
that the
waves
price
with it.
level
It's
is
just
high.
too
Prices
impulsive to
went
count
up
the waves.
much more than 2% per year for
Am I
a
missing
couple
some
of
chats
years,
here?
and
What's
people
going
are
on?
going to the
Oh,
store,
dude, I did miss some
and
chats.
they're paying much more for the basics of life than they were 2 years ago, 3 years ago, and they're not happy about it. And it's fine that inflation's going
Yeah, I
down,
know.
but
It's more like when
the
you
price
dream
that they're
about
paying is
power, it's
still
more
high.
like
So
a nightmare.
that is what that has to be some
Devil
part
horns.
of why people are unhappy.
I
And
think he's
they're right to be unhappy. This is why we need to keep price stability.
probably
It's
not
why
as
we need
nice
to
as
do
he
our
seems.
jobs, is so that people don't have to deal with things like this.
I
In
don't
terms
have
of
any labels on
you're
this
right.
job, but
In recent surveys, a couple of
it does have a little bit of a
report
3, 4, 5 look right
significant
here, doesn't it, on the
increases
daily? But
in consumer confidence or happiness with the
that
economy.
move up
I
on the
guess that's
shorter
a good
time
thing.
frames definitely has 3
That
waves.
can support
Look
spending,
at
can
that.
support economic activity. There's some evidence of that. But you're right, it is a fact
This
that we
is
have
definitely
seen
a trend. That's
meaningful
5
increase.
waves.
I think
1,
levels of
2, 3,
confidence
4,
are still
5.
maybe not as high as they've been at various times, but they certainly have gone
A,
up.
B, C. 1, 2, 3, 4, 5. Not really very good there, but we get the idea.
Thank you for taking our questions. Brian Manis, CNN Business. Committee members have said they
Doesn't
like to
really,
meet
not
their
a very
business
nice looking
leaders and
wave C
stakeholders in
though.
person to
1,
learn more
2,
about the
3.
economy in real time, given that some data is subject to a lot
Yeah,
of
I definitely
revisions,
like the fact
features
that it's at the
adjustments depending
100%,
on
and I mean,
balance
I'm
and
sure you
indicators that
do
need to be
probably have
reviewed
a pretty
quarterly.
nice trend line
So
going
did any
on right there,
members say
don't
they've
you?
learned anything not yet reflected in the data,
Definitely.
or you yourself learned anything through
I can see
anecdotal
it
evidence
without
that
even
hasn't
putting
been
it on
captured in
there.
the data yet?
Well,
Look at
yes.
that.
I'm a big believer
Well, you
in
could
yes.
kind of,
So
like I
we
said,
do
it's
meet with outside
a little
parties
discretionary. I mean,
who
you
come
could
from
probably
all
maybe put
different
it like
parts of the
that
economy,
too, but
and I always feel like
definitely someplace right in that
I mean,
area.
I spent most of my life in the private sector looking at companies, individual management teams,
Get rid of that.
and then building out from that. And so starting with
Oh, dollar
genuine
again,
data
man, nice.
and working into what's actually affecting
I
people's
bet that right
lives
there is supposed to be the
is
wave 5 of
is
wave
challenging.
3.
It's very hard. So I really like anecdotal data. In
I bet
addition,
this is the
as you
wave B
know,
right
the
here, and
12
this is the
reserve
wave
banks
A.
have really the best network of anyone.
There we go. Look at
In
that.
all their
Actually, that's
districts. They're
perfect. Look at
talking
that.
to
1,
not just the
2,
business
3,
community,
4,
but the
5.
educational, medical,
A, B, C. Oops.
all
You
nonprofit
get the
community.
idea. A,
They have
B,
arms
C.
into all of that, and so when they
50%
come back, that's what
Fibonacci.
goes into the beige book. But that they come back, and
Definitely
what
looks
each
like it's
Reserve Bank
ready.
president does is during the outlook go around, they'll say in my district, and they'll talk
Gold.
about
I see people
a
talking
number of
about gold. Oh,
conversations.
wow.
Not
Gold
people
actually made
talking.
a nice turn. I
They'll
think that's
give
the end
you
of a correction right
input
there.
based
Wow,
on the
nice.
conversations that they've
Look
had
at
with
that.
people of all different walks, and it's I personally find
Man,
that
gold, I think, is on the
very
go.
helpful in understanding what's going on, and also I think you hear things before they
Whoops.
show up in the data sometimes.
Message request.
Did
Somebody
any of them notice slowing economy based on what they've heard from like their district?
Yes, I mean if you look back at the last, not this beige book, but the one before, it was more. There was a lot of slower activity. I think that what you're hearing now is things are picking up a bit. You're hearing not in every district, and not every person that we talk to. But your overall, it feels like you're hearing things picking up at the margin. So that's what comes through.
Thank you, sir. Jeff Cox from CNBC.com. Just kind of looking to
put it all together. You had talked about basically the economy looking strong with 3.3% annualized growth in the fourth quarter. Does the strength of the economy speak more loudly to you now than any inflation threat might? That you're in a position, in other words, to keep rates elevated as long as the economy stays strong, and you're more tilted towards that. And then also, perhaps, are you worried at all that the economy is maybe a little too strong right now, and that inflation could come back at some point?
I'm not so worried about that. It's again, we've
These
had inflation come
speeches
down
go on
without
forever.
a
Is
slow
it just
economy
me
and
or what?
without
I feel like I'm ready for a nap over it.
increases in unemployment, and there's no reason why we should want to get in the way of that process if it's going to continue. So
I think it's close to being
I
over.
think,
Usually it ends at
I think
quarter
declining
past
inflation,
8, and we're already
continued
past that,
declines in
so
inflation
should be
are
pretty
really
close
the
to
main
being
thing we're
over.
looking at. Of course, we want the labor market to remain strong too. We don't have a growth mandate. We've got a maximum employment mandate and a price stability mandate, and those
What
are the
you
two
got,
things we
Connor?
look at. Growth only matters to the extent it influences our achievement of those two mandates. Thank you very much.
Oh, the 50 EMA on the JPY basket. Is it over? Look, it's over. Woo, it's over. What's gonna happen? It is finally over. I'm gonna pause that, get rid of that. It is over. Thank hallelujah. So I would be watching this 50% Fibonacci level pretty closely, honestly, because I definitely do look at this and say that does resemble 1, 2, 3, 4, 5. But like I said, it kind of almost needs to take out this high right here, so it could possibly stretch out to the 61.8. Now, what does that mean for the other pairs? I kind of feel like at this point the euro is very likely to take out the lower wave 4. I kind of feel like it's possibly going to do something like this, and then most likely continue the uptrend from there. So I'm definitely kind of thinking that that is going to be the case. But we have to be careful, like I was saying earlier. I mean, if this does make a bounce, and if it does turn into an engulfing bullish move to the upside, I would be happy to get out of my shorts, especially if we get a break of structure, and I would be looking for longs probably for the next several weeks because that's going to turn into a pretty big uptrend. But I don't really think that's going to be the case. Oh, the pound is actually looking pretty good on the daily. I feel like the pound's going to go down, take out the liquidity from these lows, and possibly even take out the liquidity from the wave 4 before it actually really does continue the uptrend. Ooh, is the pound the Swiss yen? I mean, is the Swiss yen doing what you want it to do? That's awesome. Nice, nice, nice. Oh, look at the Aussie too. Nice. I would expect that to go down. It might even go down to 61.8. I kind of feel like it's going to because it's kind of in no man's land right here. So I feel like the 61.8 is going to be pretty dang likely. Kind of the same thing on the Kiwi. And this possibly could turn into an uptrend and go up and take out the higher wave 4 before it really does go down. Some sort of a WXY pattern or something along those lines. US dollar yen to me really, really, really looks like a correction, and I really think it's going to go up and eventually take out these highs. So I am definitely still very bullish on that. So I mean, if you got to take this analysis on the daily and just apply it to the sort of time frames, and just if we think this is going to go up to the 78%, then you would say, oh, I'm going to be looking for longs on the 15-minute, 1 hour range until we get back up to the 149 area, and potentially even more than that actually. And gold, boy, gold to me looks like a solid turn. Hopefully this holds this 4-hour candle, because that really, really looks like an ABC. And boy, with that turn, if that turned to 52, I'm gonna smack Menu in the face. Like, what is? I went to 55. Wow, Menu has called it pretty good, man. You should be short on that if you're listening to the live stream. That is nice. Menu is a really good system for gold. That's awesome. Nice. Very, very nice. And then as far as the yen pairs, I mean, they're all I kind of feel like this is a correction and that they're all going to go up. And at least one more time. I think all the yen pairs need to go up at least one more time, especially when you start looking at like the CAD yen, which I don't really have my fib levels on this chart, but the CAD yen I think needs to go up and take out these levels. And the Swiss yen also I think needs to go up if we're looking at these charts. I think we need to at least go to the 172.7 area, 172.6. CAD yen, 111.15 area. Kiwi yen probably at least take out the highs at 91.5 and Aussie 98.6 roughly at least. The US dollar yen, the pound yen, I almost feel like might go to 190 or possibly even 191 something. And the euro yen, yeah, boy, I mean that could definitely break the 163.3 area for sure. So I'm definitely holding my sorts on the dollar. Oh, well, sort on the dollar pairs that is for now. I'm sort on the euro dollar. The pound dollar's actually might even be better to tell you the truth. It actually looks better to tell you the truth. And yeah, and way down the list, I think the dollar is going to at least go up, at least for the day, probably for a few days. I would definitely be watching this 50% for an area of resistance, and I would definitely be watching these highs for an area of resistance, but definitely still bullish the dollar, that's for sure. So before I do take off, one more time, I want to post a link to my Discord channel. Like I said, we're looking to build a community of traders. And it's 100% free. You never have to pay a dime if you do not want to. Rocky, what did you just say about? Did I not look at the daily? Yeah, the daily. I think. Sorry, Rocky. The daily. If you're still here, the daily. I think is an ABC of Y. I think it's going to take these lows out. I think it's going to make a higher low here, and then continue up. But I think we're very clearly in a WXY on gold. Ooh. Is it stretching out? It still looks like an ABC to me. I mean, I would have to see a pretty engulfing move to the upside, and honestly, I don't really think I would. I don't know how much gold moves on the oil moves on the Asian session, but if it makes an engulfing move up, I would still call it an ABC, definitely. So yeah, I'm gonna post a link to my free Discord channel. It's 100% free to join. You never have to pay a dime if you do not want to. It's 100% free. Now I do offer a Patreon service, which is you get all the things on this list right here. I do 9 live streams a week. I do 5 London stream live streams. I do 4 New York stream live streams. And I also, have the access to the private channels, access to the educational library. So definitely check that out if you're interested. The link for that is also in the chat and in the description. And I definitely thank you for the support. Make sure you like and subscribe to the channel either way. I really do appreciate the support from all of the people that do like and subscribe to my channel. And definitely let me know if you prefer, if you prefer live streams or if you prefer the top three videos of the day, the short 1 minute videos that I do. So, anyways, definitely taking off. This is my third live stream today, so definitely ready to take off. And as always, happy trading, and I hope to hear more success stories from everybody. So, thank you and happy trading.